All right, let's start off with the stock market technical analysis. We're going to go ahead and look at the broad markets, look at some individual trade ideas. I've been talking about several of these trade ideas. Most of them, if not all of them, are profitable at this point in time. So we'll go ahead and cover some of those, and then I'll go ahead and wrap up. Guys, drop me a thumbs up if you're finding value in the content. I do appreciate it. It does help the channel, and let's continue to see this thing grow. I'll continue to put out good trade setups that hopefully everyone's able to make profit on. And then next, if you guys are interested, I have a private member group. Mostly what I do for that private member group is I put out additional trade ideas, lots of charts, I mark up charts. I put out individual trade ideas that I'm not really covering in the private channel. It's just too much to cover on videos day in and day out. So I'm putting out that, giving you guys additional trade setups. And then occasionally I'll put out member-only videos where I'll just really talk through a lot of those trades or point out additional trades. So if you're interested in that, guys, it's $5 a month. Link in the description below. Feel free to try it out. You can cancel anytime, of course. All right, let's get going. Triple Qs. We are still trading below this trading range. Yesterday we did break. We saw that sell signal on the break of the trading range. That's about a six week trading range there. We've now broken. And again, we had negative divergence the entire time while we were in that range, so it was indicating that momentum was drying up. I did talk to you guys about when we were in this trading range, it looked like distribution. It looked like institutional distribution. And essentially what that is you've got institutions that have large positions, billions of dollars essentially. They can't exit their position in a single day. It would move the market too much typically. It would spook people. So what they do if an institution wants to exit a position typically is they exit into what's called distribution, where basically they're selling it to the bag holders, the buy the dippers, and they'll sell, but they're not going to unload their entire position. Then the buy holders come in, they sell some more. The buy holders come in, they sell some more. Like you can see there, the buy holders come in, they sell some more. Eventually, there's no more buy the dippers, and now this thing's free to fall, and they've exited their position. That's kind of how that works. Okay, so it's a strategic way for big institutions to move large positions and get the best price for it. Okay, so now that Triple Qs has broken down, I do see us heading lower. My target right now, I think, is roughly about 402.50, 403. The 200-day moving average is down there. Right, I think we're heading down there in short order. We'll probably have there's some support right in this area about 425.75. But in general, I think we're going to kind of, have a pretty quick move maybe right down to that support level and the 200-day moving average. Okay, so that's my target right now. Again, this big trading range, we should see some more downside. For the most part, it's these Mag 7 stocks. Some of them still holding up. You'll see here Tesla. This one's gapping down today, but this one does have bullish divergence right now. You can see some bullish momentum. So this is definitely not a stock I'd be looking to short. It's already down. The key short, I pointed it out when we were right back in here. So this thing's down from that kind of short area, 40%. It's not anything that's interesting to me on the short side. If anything, it's more set up for a bounce or a long trade, but there's no buy signals. Apple continuing to roll over. Apple had this breakout here. I got it kind of marked up. You can see this was resistance. It did have the breakout. It's coming in for a back test. If it fails that back test and we actually break down, that's going to be extremely bearish. So we'll keep an eye on that, see if that's actually how this is going to play out. NVIDIA still hanging in there. NVIDIA is kind of the last, it's when NVIDIA breaks, the market's going to break. You're probably going to see very strong impulsive selling on the day that NVIDIA starts to break down in any kind of meaningful way. We're still holding some support about 850. No change there in NVIDIA. Google's starting to break. Here's support, or this was a short-term uptrend on the daily chart. Broke yesterday just barely, but today kind of gapping down and holding those. So continued downside on Google. So Google to me looks like it's going to break. And again, if I point this out, you can see here, let me kind of clean this up. This high that we most recently put in was a higher high than the former high in price, and yet momentum was less. That's negative divergence. That's an indication that a reversal is likely, and I think we've started that reversal at this point in time. You have a bearish engulfing candle right there. Follow through today. I think the downside has started on Google. Microsoft, again, Microsoft had a big bearish engulfing candle yesterday, so we're going to treat that as kind of a near-term top. You really just don't want to see this thing trade above the highs of that candle in order to call that a top. So no daily close above the candle, and we'll call, and basically trade this as if it's a top. If you close above there, you'd stop out because it basically wouldn't be a top. Negative divergence and fully intact. It's a decent size negative divergence, so this should continue to roll over. Meta still hanging in there, big, clean, strong negative divergence, and this thing's just been kind of grinding higher on this little trend line here. We need to break this trend line in order for that next sell signal to come to show itself. Amazon, bearish rising wedge on this one. You can see there's this bearish rising wedge, negative divergence, starting to crack. It did break yesterday, so technically you got the sell signal yesterday, and we're down today. So I think this one's on a sell signal at this point, and it should continue lower. The widest part of the wedge, typically what you're going to do is, it's about here. And so it sets Amazon up for a push down to about 165.60 or so. And so that is Amazon. All right, financials, JP Morgan, you can see we got the sell signal a couple days ago on the big gap down, continuing lower. There's some support right here, about 173. I can see some reactions right through there, so maybe a minor bounce there. And then ultimately, I think we're going to come down and test that 200-day. It might just slice right through here. I do think it's going down to the 200 days. So whether it bounces at that support level or not, I think you're going to come down and at least hit that 200-day wherever that falls in the future. So looking for that one. I also like Visa. You can see here Visa yesterday, and it got a sell signal as it broke trend line support here. And it is below support. So that's resistance now. Resistance is about 273.85. And if I zoom in, you can see today they kind of ramped it up into that resistance, and the sellers are stepping back in. So down we go. Should head down to the 200-day moving average. It looks like there's decent support at about 254-ish on Visa, and that 200-day, whichever one comes first. All right, so from that's basically another 5-6% downside on Visa. Home builders continuing to move down. Again, interest rates, I've been all over this one talking about the interest rates rising and key interest rate sensitive stocks. So home builders, this one's the one I'm in, PHM, but obviously like DHI had kind of the identical chart, but PHM is the one I picked. Chart was relatively clean. And you obviously had negative divergence here. You've got a bearish rising wedge right there. Oh, let me grab my tool. Bearish rising wedge on this one there. All right, we broke the wedge and initiated a sell signal with the gap down, and down she goes. All right, good support right down here at about $100, 99.50. You can see on the daily chart right there. Should get a reaction in that area. So I think we're going to probably head straight down there, bounce, and then head down to the 200-day moving average. That's how I'm anticipating this to go. The widest part of the wedge, if you look at it on this one, is about here. And you take that at the point of the breakdown, and again, that sets us up for a move down to about 92.70. So that would be the target for right now on this one, and looking to close the trade out if or when we get down there. But again, it probably hits support here about 99, $100 with a bounce right there. LPX, this one broke yesterday with a sell signal. So you can see on the daily chart, there's your support and there's your sell signal. All right, with more downside, almost 3% today. So continuing lower, should head straight down to the 200-day moving average where it'll find some support. SHW, again, the sell signal came here back on April 2nd for this one. You had negative divergence. You had a bearish rising wedge. We had a break of support, and it's gone down. It hit the first level of support right here yesterday at 314, gapping down below that today. So that's resistance now. I think we're going to head down to the next level of support. It's about 294.13. Decent support there, and the 200 days just below. So that would be kind of the target right now down in that area. Yeah, so that one, you know, whether it rallies right here up a little bit and hits that resistance and then rolls over, it's still very likely going lower from here. DVN, it is hitting this uptrend line. This is oil, right? Oil service company. On the daily chart, you can see you've got support all along this trend line here, and we're now hitting that. So I would expect a bounce probably here. I think you're going to get some dip buyers come in and buy this support. Oil's been very strong recently, so it does make sense. There's no negative divergence on the daily chart. We did have it on the hourly, but again, we're now hitting that support. So a bounce here would make sense to me. You can, if I drop down to the hourly here, you can see there's the negative divergence, but again, there we are hitting that support line. And interest rates, here's the 10-year Treasury yield. They continue to rise today, seeing a little bit of easing off the highs today, but still, we're still moving up. We're up today. Rising interest rates are negative for the stock market. They're going to continue to put pressure on interest rate sensitive stocks like tech, small caps, and, you know, home builders, things like that. So we are continuing to rise, and as such, we're seeing the market starting to fall. Gold, here's GDX, the gold miners, selling off, obviously. We're at this former reaction high right here. If I kind of mark this out, you can see it's right there. And you can see we're basically right there at that level. So I think we could get a bounce here in gold. I'm not super confident on the trade right now in terms of gold. I'm kind of looking at it, seeing where it might want to go. Interest rates continuing to rise is negative for gold, so it should continue to put pressure. But there's some like Barrick Gold. They had some sort of news event, but it fell right to the 200-day moving average. And if I draw the line, the horizontal support, you can basically see there that we've had several reactions at that level. There's one. Kind of chopped through it there, but held that one. There's one. Okay, so several reactions at that level, and we're basically there now. So again, this one I think I could see at least a 1 or 2 day bounce maybe on that one. That would make sense to me. But the rest of the miners, I'm gonna do a little homework and see kind of what I'm finding, and I'll point it out in a future video. All right, that's all I got, guys. I'm gonna wrap it up. Please drop me a thumbs up on your way out, and I'll catch you on the next one. Bye.